All right, welcome back. We're going to set up another trade plan, part of our exercise for 30 trades, this time in EXLS. And I thought I'd follow up on the prior post where I introduced a trend line exercise where we would, here, I'll just pull it up over here. We did it in now, okay, where we're looking for two same size reaction legs after two new highs, right? Two confirmed swings, two same size reaction legs, and then drawing a trend line and following the market with that and then making observations. And what this does, right, by identifying two same size swings, you have now identified some organized behavior in the market, right? Some footprints. Right? Somebody's buying at a certain percentage down at least twice. And once you have that, you have some markings from which to measure, which to draw, which to make decisions on. And it's an exercise that you can practice anywhere and make your own observations rather than believe, hey, this works, this doesn't work. It's not about working or doesn't working. So I'm going to follow this up. And you can go back to the last post where I talk about this more, and we'll just go practice it before we do our trade plan here. So there's a reason to look for, organized swings. And what I'm calling organized swings is anything that makes a new high, like so, and then has some kind of organized, same size reaction leg. So you'll notice that everything's kind of different here, right? There's no organization to this, but that doesn't preclude us from doing a little practice. So let's back this chart up through its big pullback here, and see how we can learn to structure a market as well as, draw very precisely. So let's just start with this downtrend. The first thing you need to be able to do is, structure your swings. So, right, the market's moving in waves, but we still need to structure it so we can see it. So we can see a new low confirms a swing high. And the next thing you do with this is just draw the reaction leg. So now you have one. Remember, for this exercise, you need two same size legs. And you go around and you say, same size? No. Same size? No. Okay, that's different. We have another swing here. Anytime you get a wave, new low, this is a different animal than this one. This one, we'll call the blue animal. And this one is something different. We'll give it another color. Right? It's a different relativity. So all you need to do is find two of these and then draw a line. So that's what structuring a market is. So you can see we're finding waves here. And this could lead to projections later on. And then what you want to do is just take this reaction leg and see if it's about the same size. And it is, give or take, right? Give it 10%. And so anytime you see same size reaction legs, then we're going to just do our practice. And the first part is connect the dots. So we have two new lows, boom, boom, we connect the dots. We'll extend this guy out. And then the other part of the practice, remember, I wanted you to make observations. Just draw a box across the top of each swing and observe if price ever gets back there, how price interacts with that. So this is a great benefit in long, drawn-out periods where everybody's speculating. Have we reached the bottom yet? Have we reached the bottom yet? Have we reached the bottom yet? Why speculate and guess when you have no idea? How about you find some methods to at least give you a clue that something is changing? Okay? So, and then notice how it balls up here and pow, right on through. Okay. Now, I want you to just, while we're here, this isn't part of the lesson, but, when you're a trader should be curious, just do some noticing practice. Now, let's take this and drop backwards a little bit. Right? Traders should exercise some curiosity and tell me there's some very interesting things going on here. So, for instance, notice straight up, straight down to a new low. Look at this. Straight up, straight down to a new low. See the next one? So, tell me markets are not organized. They're very organized once you can learn how to read it. Straight up, right? Pop everybody, get them excited, bang them. Straight up, bang them. Straight up, bang them. This is what's called a continued behavior. Every time it makes new low, comes back here, it sells off again. Pops up, makes new low, comes back here, sells off again. Pops up, right? Each one is making a new high. So this is how you see the beauty in price action. So, this stuff gets exciting because it's like reading a book after a while. So he pops the high. This one pops the high. And this one pops the high. And then notice, right? It's continued behavior. Hit it, new low. Hit it, new low. Hit it. Oh. By identifying a continued behavior and seeing that change, something has changed. You are now prepared for change. So just soften your eyes and begin to see some of this stuff because it really stands out. Right? Don't predict it, but when you see it, they're marking their footprints here. What are they doing before they make each new low? Pop, bam, pop, bam, right? They're busting this little shelf. They're busting this little shelf. They're busting this, and it doesn't do it anymore. And this is called just trading by looking. I'd be pretty comfortable getting long anywhere and putting a stop down here by this point. But we always use some sort of a structured way to enter and manage our risk. All right, so let's make the rest of the observations. And this is something you can go and check out on your own, this particular pattern. I call it an alley-oop. But basically what it is, let's look at it in relative terms. So we'll open up this lesson a little bit more. Basically what this is, it's a relative outside bar. Right? If we went up in time frame, this is what you would see. Inside, outside. Inside, outside. Inside, outside. And it shows up. Don't worry why it shows up. Don't worry about all that good stuff. Just be happy that something different shows up that can distinguish things. All right, so let's make our observations. What do we do with our first box here? Look at the bar, big zooming through it. What do we do with our second box? All right, we're interacting off of it, right? So this is not much different than the now analysis we looked at after we marked the two swings. And you can go back to that post. And follow that. But you see, this is distinct. And we can do this very objectively in any market. If there's no swings that are the same size, then there's no organized volatility. So we watch it, boom, hold, boom, hold, and so now it's pressure cookering inside. So let's just go ahead and line up our structured setup. Basically, we don't even need all that analysis. But what I'm actually only looking at 100 bars. So all I see for my particular trade is an uptrend, an expanded reaction leg. It's bumping, and we're trying to get in. And here's the most important part. We need to make a structured plan for all this. It's good to have just a template ready to go. Okay, and then you can just go about filling it out. This is a relaxing way to go rather than guessing and hoping. I know where I'm going to enter. I know where I'm going to stop. I know where I'm going to manage. I know where I'm going to exit. And I know how much I'm doing each time. All that's baked into the plan. I'm not worried about getting stopped. Stops happen. And that's what this training is for, to get to the point where you're not worried about getting stopped and trying to avoid things. You want to change your experience of all that. All right. So let's set this guy up. And this guy, we're going to enter on the 50 line. So it's going to be a limit order. It's rather close. Hopefully we get hit tomorrow. Now, ideally, looking at the structure, I would prefer not to go in until this thing goes through the top of that. That's what I would prefer. But in my structured trading plan, I have a method, and the method plays on averages, not one-offs. Right? It plays on averages over lots and lots of trades. It's more important to learn not to avoid trades than it is to go ahead and get stopped because you were clever enough to avoid it. It's more important to learn not to try and avoid trades out of some kind of fear. Again, this is relying on averages. So let's go ahead and get this set in, 31.48. I know exactly it's going to be a limit order. I know where I'm going to put a stop. Just 25%. I'm just cutting this up in 25% pieces. 30.51. And part of my journaling, you can use your own whatever journaling software, but part of my journaling is to put it in a spreadsheet, and that will calculate my shares for me. So today is, and these are the plans we already have cooking. And just so we see, these are the stocks that we have on. So you can see the trading, right? Loss, 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 loss. 6R, 3R. Get used to losing. All right, so EXLS. Today is 320. All trades are planned ahead of time. There's no trying to be Johnny on the spot. 31.48 is our entry. We know exactly what we're going to do ahead of time. 30.51. And this is going to be a 6R trade. So we're going to need 515 shares. We're risking this much to make this much, and our target is that. So let's go ahead and put that in here. 515 with a target of 37.30. And that's it. place our order. So I'll use this risk reward tool. We'll just set it up for a good visual. So notice I'm not trying to win. I'm trying to work on my discipline and my consistency. Winning comes out of that. So it's going to be 30.51. So let's just tighten this up to 51. The target is going to be 37.30. The entry is going to be a limit at 31.48. And we're risking 0.5%, which is going to be $500. And that should give us 515. Okay, so we'll just kind of double check everything here. And orders away. All right. So that's our trade plan. And, we're going to be shooting for our 6-to-1. We're looking for something up here. Nothing fancy, right? And so hopefully, this was a good little follow-up. You'll see this kind of thing in any market. Just look for where you can find same size, organized behavior. And you'll begin to see ways that you can work with that. So this shows a very nice change in behavior while it's deciding, whether it wants to pop out of this guy or not. All right, so that's it.